Tower Financial Hour, where we help you tackle financial issues no matter how big or small. We help people go from being broke and scared to having hope with a plan. And now, here is your host, the owner and lead financial coach at Strong Tower Consulting, Justin Bennett.
And we are live here at the Webcast One studios. It is the Strong Tower Financial Hour. I am your host, Justin Bennett, and thank you for joining us today. On our show, we have Bob Conroy back from last week with Conroy Insurance, LLC. And last week when we had him on, we talked about insurance and the importance of having insurance in our lives. And today we're going to talk about how insurance will save you money. We're all about saving money, I hope, so we'll have Bob to talk about that. We're also going to keep Bob a little longer on today. We're going to talk about a class that both he and I endorsed from Dave Ramsey called Financial Peace University. It is a 9-week course on how to get out of debt and build wealth, and we want to share with you what we think of the class and why we endorse it and we think of it so strongly. Later on the show, we're also going to talk about how you can get out of debt. With tax season coming, tax refund season, the average person or average household gets $2,000 to $4,000 in tax refund. So it might be a good time to talk about how to get out of debt. And we're going to walk you through those steps as a part of the show today. Well, Bob, Conroy with Conroy Insurance, LLC, welcome back.
Well, it's good to be back, Justin. It's like I haven't left.
So we're going to talk about today about insurance and how that saves money. But to recap, last week when we had you on, we had you talk about insurance and the role insurance plays. So let's just recap that quick. What is the role of insurance at the end of the day?
Well, and going back to last week, I kind of went through the auto and the homeowner's policy and went through the basic coverages that are in it. But I think going even a step higher, insurance is really a transfer mechanism. It's to get risk out of your life. I've heard people say, I've paid my premiums my whole life and I've never had a loss and I've got nothing for my money. And that's really not true. When you pay your premium, you're not paying it to get claims paid. You're paying your premium so the company will respond when you have a loss. So you're paying for that contract, for that transfer of risk. And I know you talk to your clients about debt and getting the risk of debt out of their life. Well, that's what this is. This is all about looking at getting risk out of your life. That's the high level of insurance. It's a risk management technique.
Wow, very cool. So how, especially in auto insurance, how does insurance save people money? Because everyone always looks at it as, well, I have to spend this money every month or every 6 months or every year on insurance. How can we look at insurance as a saving money tool?
Well, it's I don't know how, I really couldn't say that it saves you money, but what it does is it protects you from the large losses. So you pay a premium, you transfer the risk of a large loss to the insurance carrier, and then if you need to collect on that because of an accident that's covered, then they step in. So it's a financial tool. It's in effect, you're financing your losses ahead of time.
Gotcha. So what about deductibles? People, when I talk to, should I keep a low deductible, a high deductible? How does one know what level of deductible they should have on their policy?
Well, and really, that's one part of a whole lot of things. So if you're really talking about how to save money on your insurance, one you have to assume that you need it. Not everybody has insurance. Large corporations sometimes self-insure, which is another way of saying they don't transfer the risk to another company. Government entities sometimes don't buy insurance. They have enough resources or some immunity from liability. Very rich people sometimes don't buy insurance. If they have their cars wrecked or stolen, or they just write a check. They have the resources to do it. The other group that typically don't have insurance are very poor people. And so that's and there's a huge difference between a very rich person and a poor people, and most of us fall right in the middle. So what we're looking at is we need insurance to protect us from those large losses, and we need to find ways to make that affordable. Deductibles are one of them. You can save 15, 20, 25% going to higher deductibles on your total insurance. So yeah, that's a good way to do it. But think of that deductible as retaining a little bit of the risk. So you've retained it. Now, what if you have an accident and you have to come up with a deductible? And I think that's where you step in, helping people with their budgets and making sure that there's an emergency fund to take care of those deductibles.
One of the things as I work with my clients sometimes is they have too much car.
Oh.
They may have $400, $500, $600, $700 car payments. I've actually seen them in the thousands of dollars, not multiple thousands, but 1,000 or higher car payments, which just baffles me when I see that. And then sometimes they have toys, maybe big boats, those kind of things. So one of the things I walk them through is maybe you need to look into seriously getting a less expensive automobile versus spending $500-600 a month. Get rid of that. Get a $2,000 or $3,000 car payment, or not a car payment, but a car rather. And part of that then is they have a insurance premium that is less because they're not insuring a more expensive car.
Yeah, the program where the government bought the junkers a few years ago, and people went out and bought new. Well, they had to buy new cars to get that to work. Well, their insurance premiums went sky high. All of a sudden, you're buying full coverage on a car, which is required if you financed it, which most people do, and yeah, you raise your prices up there. But that's one of those things when you talk about getting debt out of your life. If you've got toys and they're financed, you probably really couldn't afford them, and it's time to kind of sit back and think about that and get those out of your life. We'll talk about a friend of mine who had a lot of toys, and basically all he had was payments and didn't have any time to enjoy. We'll talk about that in the next segment. We talk about financial peace.
Absolutely. And I will tell you, as a former banker, whenever anyone, and you touched on it, whenever a customer goes and gets a loan on their vehicle or on anything, or a vehicle or a house, insurance was required. We just had to have that insurance because if something happened, we want to make sure as the bank that we covered our losses, just like what you're doing, getting the premium, so in the event that you have to pay it out going forward. So what other things can people look at with their insurance policies from a saving money perspective? We see all these commercials out there. We can save you all this money. Come out there and do a quick quote. Are those good places to look for, or should they go to an independent agent? Or
well, they're a place to look for. I'd obviously recommend an independent agent, and that's what I do. My wife, our agency, we represent 8 companies and large household names. A lot of the ones that do a lot of advertising, they'll talk about saving the money of a commission. I work on commission, and the whole world works on commission at one level or another. But these companies that do all the advertising and sell direct, what would have been commissioned to an agent is spent on cute advertising. And that little lizard's kind of cool, and he's fun to watch. And although I am getting tired of the Australian accent, it seems to be everywhere. But there's no free lunch, they're spending that money there. So go to an independent agent. You'll get quoted with 6 to 8 companies in most cases. You can always go to some of the direct writers, and that's the ones that represent one company, like a State Farm or American Family, so on. And just do comparison shopping. I mean, that's the number one thing. Make sure you find an agent that has the heart of a teacher that will work with you and walk through that. If you're on a budget, let them know up front, and let them go through and figure out what could safely be cut out and what couldn't, and make sure that the big things are covered. And
so one of the things that you as an insurance agent, then an independent insurance agent, I should say, works through is, okay, with your budget, how much can you take a hit on? So if you have to replace the car, how much can you take that? Or if you get damage, that's one of the things you walk through. Yeah,
we'll talk about that. It may not come up unless they bring it up, though, because we're going to look at providing coverages, and we typically will find holes and gaps and so on, big ones, and we'll plug those. And sometimes there's things that are insured, rings or something that really, for the cost of insuring some jewelry, it may not just be worth it. So we have those discussions.
We weren't talking about this earlier, but I'm gonna throw this at you. So the claims process. So if someone has a claim, explain that process. If you get in an accident, what should they do to contact you?
Oh, well, on claims, you can call your agent, or usually your insurance cards that you have in your car, which you should have in your car, will have an 800 number, and the thing would be call as quick as you can. And call your agent to let us know that we'll be notified by the company. But if you're having any issues and getting things settled, you can get us in the middle of it, and we'll be your advocate, make sure that you're treated fairly. I got to tell you, there just aren't bad companies out there. They just take care of claims, and it's sometimes when you're the third party, or you've got a hit and run, things like it takes time to adjust those, but you're going to find pretty good service. But get us involved. I was just thinking there's other ways too to save money, and when you're getting your insurance quoted, try to get your insurance with one company. If your homeowners or your renter's policy with your auto insurance, there's pretty substantial credits if you have both of those with the same carrier. That's a big one. Paying on time. Make sure you pay your premiums on time. Don't let your policies lapse and reinstate. that's a negative factor, and that could cause you to drop into a different rating tier, and you'll pay a lot more money, not only the service fees if you're late and making those payments, but you'll end up paying more. And then on claims, if you turn in, the other reason for larger deductibles is not to turn in smaller claims. There's databases where all the carriers report their claims, so that no matter how many companies you go to, there's one source then that tracks these claims. And if somebody has a lot of claims, they're going to pay more money. It's just going to be built in the rate, which is fair.
Well, it's interesting. We talked last week about kind of an insurance scoring, and basically there's an insurance history that just keeps going with you for the rest of your life.
It follows you for life, from state to state and from house to house, car to car. It'll follow you around.
And there's just, and I don't know the number, I don't know if there's a number, but thousands upon things that can enter into the score. In fact, earlier today, I was joking with you. I was like, so you're telling me if a red car versus a white car, it might rate me different?
It could with some companies. All the factors are proprietary, but the side of the street for a house, if a driveway faces south, it's less likely to have ice in it than one that faces north. And it may be $1 or $2 difference, but it might trigger 5 policies from one big company to be with this company than the other, and could make a huge difference over a period of years with lots of companies. So yeah, they're tiny. There's no one factor. Even the credit isn't that big as a single factor, but they all add up. But the bottom line, don't turn in the small claims. Look at it as a risk transfer of large losses, and build up your emergency fund. That's the big thing.
And that's a good point. And one of the things that both you and I believe in, and we'll talk more about that in the financial piece, is the Dave Ramsey 7 baby steps. And so baby step 1, $1,000, and having that $1,000 is a small way to mitigate some of that risk. So that way, if something happens, hopefully you can take care of some of that on your own versus, oh, it's a small claim. Oh, my insurance company will take care of it. Well, they might, and they will, but then you're going to face a premium.
It'll come back. Yeah, exactly.
Very good. Well, again, people, your website is conroyinsuranceLLC.com. That's where folks can go to get a quote on insurance, and you guys are real quick to respond whenever there's a quote.
It's our life.
So, well, thank you again, as always, to talk about insurance. When we come back from the break, we're going to talk about a class that both Bob and I recommend, Financial Peace University by Dave Ramsey, 9-week course on how to change your life when it comes about money. Goes over everything. So when we come back, we'll talk about that. We'll also be talking later on today's show on how you can become debt-free. Yes, you can become debt-free. I've walked people through. Dave Ramsey has as well. And we'll talk about that after the break. Thanks for joining us.
I'm Brian Leach, owner and general manager of Service Legends. I brought along a couple of the home comfort heroes.
Hi, I'm Tammy Wells.
I am Nick Wondershad.
I'm administrative mmanager
I'm the senior technician
from Service Legends.
It seems like every good thing, when you feel it to the bone that it's good, there's a lot of hard work put behind it. I don't think that you can fake it and have it turn out good.
You know, if we seem like, okay, that's just weird, it's just a furnace, why would you believe so deeply in a furnace? It's not just that, you know, we want to show the world that you can have good service.
Yeah, I mean, it's got to be, it's your home.
You know, it's built into our daily trainings, it's built into our culture, that we're going to do whatever it takes to have each client say they love us, period.
That's why we spend all the hours in the training that we do. And if we guarantee it's going to be a good experience for you, or else it's free, what type of work do you think we're going to do?
There is a guarantee.
Temperature selection guarantee, fixed rider it's free guarantee, comfort guarantee, best value guarantee. All of these guarantees hold us accountable to ensuring that we exceed your expectations. And if for whatever reason we'd fail and we can't make it right, we guarantee all of those guarantees with a 100% money back guarantee.
I mean, if you don't think that your technician can fix it right, are you going to say that to a client? No.
You don't have to worry about having a technician come to your house.
We drug test, background check all of our team members. We put safe people in your home. Each and every one of our service techs, 400 hours a year in training.
You tell it the minute they walk in the door. They know what they're doing, they've done their homework, and they actually truly care about what you want.
Because at the end of the day, you're the person that makes sure I have a job.
They're going to be listening. They're going to want to know what your challenges are. Then they're going to come and give you options, and you get to choose.
If I'm there to help and I make it easy and painless, I did my job right that day.
Well, when it comes to your comfort, safety, and your family, you know, you don't necessarily go buy the most expensive, but you get the most bang for your buck.
Oh, it's worth it, because there's a lot of people that will find a way to get it to work right now and then leave, and then come back, charge you again, and the cycle just repeats itself. So when I'm out there looking at the furnace, I want to find why it failed today. How can we change the part today with something that you're not going to have to worry about? Is it worth changing the part today? I mean, you can put a lot of money into a furnace. I can fix parts all day. There's good job security in that for me, but is it the right thing for you?
I get a lot of the phone calls of after the technicians are there. They're just in awe. They're like, wow, you guys are great. I mean, I don't even know what to say. You guys are great. Everything you did was perfect. It was great.
Keep going though, I like this.
Just give us a try. I'm gonna take all the risk.
I've got the time to make this right. I've got the support to make it right.
Just check us out.
And if you don't see the value in what we do,
I mean, fixed right or it's free or 100% money back.
enough said.
And we're back here at the Strong Tower Financial Hour. This is Justin Bennett, your host, and thank you for joining us. Our last segment, we had Bob Conroy with Conroy Insurance, LLC, talking today about how you can save money with auto insurance. So if you missed that, make sure you go back and check that. Also, later on the show today, I'm going to teach you how you, yes, you, can become debt-free. Imagine what it would be like to have no payments owing anybody anything. Imagine all of that being gone. We're going to show you the emotional, the spiritual, the financial, the mathematical, all those things on how to get out of debt in the show later today. But on our next segment, we got Bob. He is still with us. He hasn't left us yet. Thanks, Bob. And we're going to talk about a class that you and I teach a lot that we're very passionate about called Financial Peace University. It is a 9-week course taught on DVD by Dave Ramsey. And with this course, it goes over every area of your finances. It talks about how to save money, get out of debt, investments, insurance from, again, someone who doesn't sell it. Talk about real estate, giving, how to relate with your spouse if you're married, how to handle money if you're single. It goes over all those main points we all wish we knew back in the day. We can now learn. And this is a class that you can facilitate once you've been through, and Bob and I have facilitated many classes. Again, it's an hour DVD followed up by a half-hour discussion in small groups. And now you're not sharing, I have $30,000 in credit card debt, and I have this many credit cards. But you should discuss what you learn in the class, and these small groups really help solidify what was learned in the class. So, Bob, let me ask you, when did you get all wrapped up in Financial Peace University, and what got you excited about teaching and facilitating the class?
Well, it was 7 years ago. Looked in a church bulletin and saw there was going to be a class, and my wife and I talked about it. And Debbie and I, we've between us, I think we were coaching about 12 people and helping them with their finances, and just we naturally seem to attract people. We handle ours pretty well, and people can tell. I think maybe there's just like this little ring around people that do it, but. Well, we were helping, but we were always getting uncomfortable that maybe we weren't doing the right thing or we weren't giving them as much support as they needed. We saw this in the church bulletin, and we thought, we'll take the class. And happened to be one of the better decisions we've made. I saw the Dave Ramsey stuff and all the stuff that you teach. It's the same principles, and it's not real complicated. It's just spend less than you make and have some savings for those things that come up that we call life. And but there's a program, since most people have debt. It's a way of systematically getting that debt out of your life and getting that risk out of your life. So we just loved it, and we got called back. I guess it was right after we finished that one. The next class of the church had over 100 people in it, and they needed some additional people to help facilitate and host the tables and the discussion. And we signed up to do that, and we ended up doing 9 more. So we've seen a lot of people, seen a lot of things happen over those classes.
So you've done 10 classes over how many years?
6 years.
Wow. Mm-hmm. So what keeps you coming back? I mean, it wasn't just something that you just checked a box off and said, oh, I'll facilitate a class, said I've done it, and move on. I mean, you've done 10 of these over 5 years. Mm-hmm. What keeps you coming back?
It's the friendships you make. You meet people that just, all they need is a little bit of help and a little bit of motivation. We've made some really good friends out of this. But it's giving back. It's just sharing those. Actually, it's not even us doing the training. It's the DVDs, but just facilitating, making sure it works. But we've seen it change people's lives. It's just and if anyone that's listening, just sit back and think of what it would be like not to have any debt in your life. It's an amazing place to be.
It is. Now, you have an interesting example back, I think, when you were coaching. You said you did some coaching before Friendship Peace University, and you had a neat example with a guy you knew at work. You want to share that with us?
Yeah, and this is somebody I used to work with, and a good friend. You wouldn't do this with anyone else, and he understood what I was getting done. But I was getting ready to buy my first flat screen TVs, and we could afford it, and it was budgeted for, and it was the whole thing. And we were buying all three at one time one really large one for this large family room. So I had just under $5,000 in my pocket that day going to work, because you're going to pay cash for it. You want to make sure it hurts when you buy those things. And I called this guy into my office, and he had been in and out of the program. He tried, and his wife had been in it with him, but they just couldn't stick with it. And he wanted all the lights to be green before he got it done. And I'm sure you've seen people like that. So it had to be the perfect budget, the perfect everything, and he just couldn't pull it together. Well, I called him in. I said, "You're not going to get any of this money. This is a prop, but I want you to just visualize this." So ask him what his house payment was. I forget the exact numbers, but it was like $2,100 a month. So I count out $2,100. How much is your car payment? I put that in there, and his wife's car, and then the money they had on credit cards, and put that all out there. And I said, "Now, is that everything?" "Oh, second mortgage." So we put that in there. And it took almost that whole $5,000 to cover what he was doing. So then I went back and said, "How much of that's going to pay off principal?" So we pulled 100 out for this one, and 100 there, and 100 there. At the end of the day, there was still $4,500. And you spread out $100 bills on a table, it looks like a lot of money, and it is. And that was what was leaving his family every single month, Justin. I mean, it was gone. That was the kids' college funds. That was his retirement fund. That was their vacations. That was getting stressed, but it all went away. And what the financial peace teaches you to do is, for getting intense for a couple years and living a smarter life, you get all that out of your life, and then you can live like no one else.
Absolutely. There's no statistic out there other than my experience, but so far I find it to be very true that the average American household has at least $1,000 a month going out into payments, not counting their house. So when you add up your student loan payments, your credit card payments, your car loan payments, overdraft loans, home equity loans, debt consolidation loans, some payday lenders for some folks, you add all that up, it doesn't take long to get to $1,000 a month. And you talk about that's retirement, that's kids' college, and then saving up and paying for things. I'll never forget the first time I saved cash for anything outside of high school was for a very expensive guitar. And I remember saving back, and it hurt when I did it. But there's a lot more enjoyment in getting that guitar when I bought it and saving for it, rather than, oh, plastic, swipe, and done. And that's one of the reasons why I coach, why I'm very passionate, and why you do we both do FPU, Financial Peace University classes, is we see the lives change. Well, number one, we see where they are right now, and we see the hurt, we feel the pain that they're going through, and we go, there's a much better way, and we want to be beacons of light, beacons of hope to share with them. And this is just a tool in our tool belt that we use, this Financial Peace class, to show people how you don't have to live broken, scared anymore. You can have hope. You can have a plan, and it will change your life.
Yeah, I noticed in the first 2 or 3 classes, just getting an initial budget done, so many of the people have never done a real budget as a couple. And the other thing it does is it forces them to sit down and really set some goals. If somebody's going to do a drastic change in their lifestyle for a couple of years so that they can really enjoy their life, they got to get on board together. I mean, this has got to be a mutual decision. It can't be, you can't drag somebody through there. And so some of it's just getting the couples to talk and deciding what their real goals are and what their values are. Because how you spend your money is a direct reflection of what you think is important. And so if you think living in a house you can't really afford, or buying cars that look nice but depreciate every day and all that, if that's what's important to you, that you're showing that to the world. But if you think it's more important to have financial security and be able to help in ministries and do the things that you want to do, get the debt out of your life.
Absolutely, absolutely. So, give us a story. I mean, if you've done 10 classes now, there's got to be a couple, or either a single person or a couple that stands out that you got to watch them change their life. Is there any stories you can share? Obviously, maybe not specific names, but who have changed your life?
Yeah, well, and I'm glad you said not to mention names. I was just about to, and they're bloggers. They're pretty out there. But it was one couple in our class, and they were really struggling. They were struggling on this whole thing of values and where they were going to go. and you could just see week after week as they got stronger and stronger in their commitments to each other and in their marriage and a vision together, and they just turned it around. I mean, it's just amazing. They've got everything out of their life, all the debt except for a house, and they've got the house under control. It's something they can afford. They've got a 6-month emergency fund, and the neatest thing is since all that happened, they had a little baby, and so it's just kind of neat to see that it can pull it all together and make it happen. And we're not talking a sacrifice. It's terrible. We're just talking about being sensible about things on your purchases and controlling your money and making sure it just doesn't get away from you. I mean, how many people have had this where you wonder where that money went? That's because you didn't really budget right.
It's interesting. You know, right now I am coaching a woman in her 80s, and she's widowed, and she is working her tail end off. She's getting out of debt. She's doing all the stuff that we teach. And what's real interesting is every time I meet with her once a month, it's Justin, I cannot, my husband and I, when we were married, we worked our tail ends off, and we had a lot of money go through our fingers. Where did that go? Yeah. And every month she's almost got all of her debts paid off, and she's just like, Justin, where'd my money go? Well, it went, but we're going to worry about the future. We're not going to worry about the past. Yeah. Now, one of the things I do one-on-one financial coaching, and you get to see that as we share office space, and thank you for that. Walk people through, why would it be important to go through not only the class but coaching at the same time? Some people might think it's redundant, or why would coaching be a good add-on to doing the class?
Well, every single time I've gone through the class, I pick up a little nuance, another thing. I mean, maybe I'm a slow learner, I don't know, but every time I go through there, I've always picked up something new. It was great. The other thing, frankly, was to be an example to our children. Debbie and I have 5 children, and they're all doing better. They're all. I can't tell you that any one of them has gone through the entire program and done it exactly right. One of them is almost spot on, but she won't call it Financial Peace University, but she's following all the principles. So if nothing else, we've set a good example for our children, and our grandkids get it too, and that was important to us. But you talked about somebody in their 80s. We've seen people in all different age groups, and if somebody in their 20s, a young couple just married, can embrace this and resist the culture of going into debt, wow, when they're 80, they'll be multimillionaires and doing whatever they want.
Absolutely. Well, Bob, as always, thank you for having us on to the show and talking both about insurance in the class Financial Peace University by Dave Ramsey. When we come back on today's show, we're going to talk to you, yes, you, on how you can become debt-free. Get that debt out of your life so you have the money to do what you want to do, to buy the things you want to buy, to invest for retirement, to save for your kids' college, and no longer have that stress in your life. If you want that stress gone, come back and we'll talk how.
From the RE/MAX Real Estate Concept Studios, this is Webcast One Live.
Drug and alcohol addiction slowly steals a person's identity, tearing away pieces of their life little by little until one day it seems like the hope of a happy future is gone and there's no chance of getting it back. Here at St. Gregory Retreat Centers, we can assure you that there is hope. Our unique approach to recovery begins with the understanding that the dysfunction and damage caused by addiction can be overcome, not just dealt with. Don't let another day go by. Call St. Gregory today.
My name is Justin Bennett with Strong Tower Consulting, where we passionately coach individuals, families, and businesses to make better financial decisions that help create success and eliminate financial stress. I offer a free 30-minute consultation where we find out where your situation is. I explain how I do my coaching services. Then it's up to you whether you want to continue. The Bible has, depending on who you believe, 800 to 2,000 scriptures that talk about money alone. So pretty important subject in God's eyes. That's one of the things that I enjoy doing, is help them see God's ways of handling money. It's interesting, most people that I ask, what would it be like to be debt-free? The common response is, I don't know. I don't think it's possible. But in 90 days, most of my clients go from, I don't think it's possible, to, I'm excited. In 2 years or less, I will be debt-free. There's no tricks, no gimmicks, nothing being sold here. It's just learning how to do money well. This is Strong Tower Financial Hour, where we help people go from being broke and scared to having hope with a plan.
Hi, I'm J. Michael McCoy for Adam Albrecht. financial planner, and AO Wealth Advisor. Adam, tell the folks listening today just who is Adam Albrecht.
I am a certified financial planner, and I created AO Wealth Advisory a couple years ago to be able to help people with their finances all the way from basic budgeting on to retirement and estate planning.
All right, now that we know who you are, what do you do? How do you help people?
I help people by focusing on three key areas, on what they earn, how they invest it wisely, and then also where they give it on, whether it's onto charity or onto family, but do it from a biblical base, using verses that have been around forever, transcendent knowledge that's been around 4,000 plus years.
Call Adam Albrecht, a financial planner with AO Wealth Advisory. Give us your number, Adam.
Yeah, 515-224-7849.
Advisory services offered through Investment Advisors Corp., an SEC-registered investment advisor. Securities offered through Broker Dealer Financial Services Corp., members FINRA and SIPC. Thanks for watching.
And we are back here live at the Strong Tower Financial Hour, where we do help people from being broke and scared and give them hope with a plan. Thanks again for joining us. Again, earlier we had Bob Conroy on our show talking about insurance and also the class that we both highly endorse, Financial Peace University. Well, we mentioned that we're going to teach you today how to become debt-free. Yes, you, how you could become debt-free. Get rid of your car payments, your student loan payments, credit card payments, whatever you have for payments, and get them out of your life. Again, I can't tell you, but almost all the clients that I work with have about $1,000 at least a month going towards debt. This is your student loans, your car payments, your credit card payments. Some are payday loans or outstanding medical bills or overdraft protection, home equity loans, home equity lines of credit. If you add up those payments every month, the average person is spending at least $1,000 a month and having no peace financially. In fact, quite the opposite, stressful. When I meet with folks, I often do a free 30-minute consultation to get the ball started. And the one question I ask is, when you look at your current financial situation, what thoughts and emotions come to you? I often get scared, embarrassed, angry, worried, depressed. I've even had a few tell me, Justin, this is bothering me so much, I am suicidal. Wow. So I've also talked with clients, and I've said, so imagine, what would it be like to be debt-free, have money in savings? Wow, I'd be content. I would be happy. I'd have a sense of peace in my life. So one of the things that we're going to talk about is how to get out of debt. The other day on my Facebook page, and by the way, if you want to know where I am on Facebook, simply go to facebook.com/StrongTowerIowa. Again, facebook.com/StrongTowerIowa. And one of those questions was posed to me the other day after I put a post from a client, which in 90 days paid off $13,000 in debt and saved $1,000. That is a $14,000 change in position in 90 days. And the guy who put the question on Facebook, like Bob and myself, has taught many Financial Peace University classes. Justin, how do people pay off that much debt in a short amount of time? Or people who stay focused and they pay off $50,000, $60,000, $70,000, $80,000 in debt or 2 or 3 years. How do people do that? And so I wrote a blog on that. And if you ever follow me, I do a weekly blog. Go to strongtowerconsulting.com. You can follow our blog there. And I did a weekly blog entitled Doing the Impossible, Paying Off Debt. Here's the first thing and the most important thing you have to do if you want to become debt-free. Are you ready? Stop borrowing money. You cannot be debt-free if you are continuing to borrow money. And what I tell all my clients in our very first session is this. You have to deep down say, I am never going into debt ever, ever, ever again. Amen. I'm never going into debt ever again, with the exception of maybe a house. That means no more car loans. That means no more credit cards. That means no more student loan debt. Now, if you think about how our culture operates, you're going to go, how can I operate in this culture without any debt? Well, that's where you're going to have that paradigm shift and go, you know what? I'm not living in debt anymore. And if you don't believe me, just have that Dr. Phil moment with yourself. How's debt been working for you? And if you think about it and answer honestly, you're going to say, it hasn't been doing very well for me. So you're going to have what Dave Ramsey calls that I've had it moment, where you're too tired of being broke. I remember back in the early 80s, Bill Cosby had this HBO special called Bill Cosby Himself, and he was talking about how him and his family and his wife, they'd get to a point where she's had enough of her kids misbehaving, and she would scream, "I have had enough of this." And that's where discipline would happen, and she would just take control of the house. That's what you have to do. You have to say enough and say, I'm not going in the debt anymore, and I'm doing whatever it takes under legal and moral bounds to get out of debt. When you've had that spiritual and emotional change, now you're ready to start tackling the debt. But you got to really believe it. Because if not, you're not going to get out of debt. Or if you do get out of debt and life gets tough, you'll go right back in the debt. So you've got to draw a line in the sand to make that commitment. I'm not going in the debt anymore. I am going to actually pay off this debt. What do I got to do? Well, here's some things that you need to do. First off, you need to be living on a written plan called a budget. As we like to say, it's on paper, on purpose. Before the month begins, every dollar has a name, as Dave Ramsey says. So you want to make sure you do a budget every month. If you're single, have an accountability partner. If you're married, both of you need to be working through the budget, agreeing on your spending, agreeing on your saving, agreeing on your goals. Because if you're agreeing, you're going to have synergy and you're going to have traction. So you need to be doing a brand new budget every month. That's the first step. The second thing you need to be doing is you need to have your emergency fund of $1,000. Remember the Dave Ramsey 7 baby steps. So baby step 1, $1,000 cash in the bank. So you need to have a small junior emergency fund of at least $1,000 in the bank. That's going to catch the little gotchas like the alternator going out, the baseball going through the window, kids needing to go to the doctor and pay for co-pays, and you maybe not had them stored. And so that little $1,000 emergency fund is going to cover most of life's gotchas as you are getting out of debt. The next thing we do is we do the debt snowball. It's baby step 2. With the debt snowball, this is where you list all of your debts, smallest to largest, based on balance. So make a list of all of your debts, get all your credit cards out, your student loans, your car payments, your home equity, get all of those out, list them smallest to largest by balance, and pay minimum payments on everything but the smallest one. So stop paying $5 a month on all your bills. Pay minimum payments on everything but that small 0% credit card or that small medical bill. And with everything you can, by reducing your budget and extra income, which we're going to talk about in our next segment, and throw all that money towards that first small debt. When you pay off that first debt, you're going to get a sense of, wow, I paid off a debt. Yes. So now we take that money from that first debt, and now we pay off the second debt. And then when you pay off debt 1 and debt 2, you take those two together and you pay off debt 3, and you start building the snowball. It gets bigger, 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 and bigger. So that way, when you get to that large last debt, which for most people is usually a student loan of $10,000, $15,000, $20,000, or a car loan of $10,000, $15,000, $20,000, when you have that last one left and you've paid off all your credit cards and your home equity loan and your medical bills and your credit cards, you've paid them all but that last one, you're going to have at least $1,000 a month going to that last big monster of debt. And let's say you have a $10,000 student loan left to pay, and you're paying an extra $1,000. Imagine that for a moment. You're paying $1,000 a month to your $10,000 student loan bill. Where I come from, in 10 months, that thing is gone. And then you are debt-free. So imagine for a moment being debt-free. What would you do? Would you save it? Would you give it? What would you do differently so you wouldn't go back into debt? Would you invest it? Would you still buy things with cash? That's the whole purpose of being debt-free, right, is to get control of the money. So again, first thing is you got to have a spiritual and emotional change to get out of debt and say, I am not going in the debt every more. That's part 1. The next thing you do is you do a written plan every month called a budget. The next thing you do is the baby step. So baby step 1, $1,000 cash in the bank. Baby step 2 is that debt snowball. Here's the other part that I highly recommend, and that's you're going to have some lifestyle change. Now, in a separate blog I did called No More Excuses, I talked about how most people, when they want to get out of debt, typically what happens is they'll cut the cable and they may reduce the eating out. Now, that is a great start, and I don't want to poo-poo anybody for doing that as a getting started. But the people that I know that pay off $10,000, $12,000, $13,000, $14,000, $80,000 or $30,000 in debt in 90 days to 100 days, they did a lot more than just cutting out the eating out and cutting out the cable. They may have done that, but that was just a start. They cut back lifestyle considerably. Now, that meant they never had fun. That's not true. They had fun with life, but they were focused and they had a goal and they were going for it. But the other thing that they did was they increased income substantially. Again, in the next segment, we're going to talk about this. But I want to share with you on one of my blogs a comment. I mentioned earlier that at the end of the day, changing lifestyle. Check out this comment from my blog on doing the impossible, paying off debt. My wife and I eliminated $34,000 in debt in our first month by selling my truck and using the proceeds to pay off 3 credit cards. So they paid off $22,000 of their truck loan, and they paid off $9,300 on 3 credit cards. And now they're beginning to save money towards their next vehicle. I'm driving an extra old car in the meantime, exclamation point. Once I got a vision for being proud of being out of debt, instead of being proud of the truck I was driving, this wasn't even hard to do. Thanks, Justin, John in Ames, and actually John and Patty in Ames. And so what they did was they changed lifestyle. They said, you know what, I love this. When it says, once I got the vision for being proud of being out of debt, instead of being proud of the truck I was driving, it wasn't even hard to do. Because a lot of us out there, we're driving car payments of $400 a month, $700, $800 a month, and we love what we drive. But we hate writing the car payment, and we hate being broke. And once you realize it's just a car from point A to point B, if you have a massive car payment and get rid of that, that's quickly, easily $20,000, $30,000 out of your life from debt. But you also have $300, $400, $500, $600, $700 a month to go towards paying out of debt. And what I have learned from most people, if they have an additional $500 to $1,000 in debt, they can pay off a lot of debt in 2 to 3 years by just simply doing a budget, having $1,000 savings, never going back in the debt, and finding an extra $500 to $1,000 a month that they can put out of debt. And when you can sell toys or sell bigger items that have big payments on them, that can help you get right on your way to getting out of debt. Now, if any of this sounds awesome to you, and I hope it does, I coach people all the time on how to become debt-free. And how I do that is I do a 90-day coaching process where I walk through every area of your personal finance, your income, your assets, your liabilities, your debts. I'll teach you how to budget, what we call the 7 biblical principles of personal finance. I'll teach you the 7 baby steps to get out of debt and build wealth and how you can apply that to your life. I'll teach you how to budget, all in 90 days, and hold you accountable in this process. The average person going through my coaching process pays off $4,000 to $6,000 in debt in 90 days and saves $1,000. That's a $5,000 to $7,000 change in position. That's a pretty big deal. I mean, think about that. How would you like to change your financial position by $5,000 to $7,000 in just 90 days? Well, you might be going, well, Justin, that's all fine and good, and I'm sure you can help me, but how do I get this extra income? How do I get this extra $500 to $1,000? That all sounds nice, and I'm sure it looks good on paper, but how do we actually do that? Well, coming up after the break, I'm going to show you there are 5 ways you can increase income right now. 5 different ways you can do to get out of debt and build wealth. Now, before we get to that segment, I want to ask you that again. Are you ready to get out of debt? Are you sick and tired of being sick and tired? Are you tired of not being able to take your kids on vacation without swiping the credit card or getting a home equity loan? Are you tired of fighting with the spouse about money? If you are tired about living that way in your life, I can show you how. So coming up after the break, we're going to show you to get this extra income, because you're going to need this extra income if you're going to want to get out of debt. Thank you very much, and we'll be back.
From the RE/MAX Real Estate Concept Studios, this is Webcast One Live.
Hi, my name is Steve Bensmo with RE/MAX, where a house becomes a home. And when your host, Justin, wanted to sell his home, he gave me a call. I want to share a little bit about my buying philosophy when I work with home buyers. I always want to make sure that people are taking into consideration what home they can afford, not what home they think they can afford. So I ask a question around if they've really looked at what their budget looks like for buying a home. And there's for 2 reasons. One, I do not want my clients calling me in 2 to 3 years to do a short sale. And I want people to be able to order pizza on Friday night and not be worried about the mortgage on Monday. So if you're looking for a home to buy, and you want someone on your side to make sure you're buying the right home for you right now, give me a call at 515-257-6531. Again, that's 515-257-6531. Or check me out on Facebook. Again, I'm Steve Bensmo with RE/MAX, where a house becomes a home, and I'm looking forward to working with you. Thanks.
At Conroy Insurance Services, LLC, we help families and business owners protect their most valuable assets. We have established an excellent reputation with our clients, and we will continue to strive to exceed your expectations. Our talented team of insurance professionals are always available to assist you, and that is why we are independent, trusted, and preferred. Hi, I'm Bob Conroy. Contact me for all of your personal and business insurance needs at conroyllc.com.
Drink, dance, party. Kitty's is the ultimate dance club in Des Moines. A huge dance floor with room to move, 3 bars to keep your drinks full, and kickin' DJs playing all your favorite dance music. At Kitty's, we've always got your birthday party planned with Birthday Fridays. That's right, when your birthday rolls around, there's only one place to go. Gather up your friends and head to Kitty's, where you drink free on the Friday of your birthday week. Find out more about Birthday Fridays at kittysusa.com. Kitty's, all kinds of people, all kinds of music, all kinds of fun.
And we are still live here at the Webcast One studios. It is the Strong Tower Financial Hour. I am Justin Bennett, your host. And again, thank you for joining us today. Earlier in our show, we had Bob Conroy with Conroy Insurance LLC talking about insurance. And we also talked about a course from Dave Ramsey called Financial Peace University. Last segment, we talked about getting out of debt and steps that you need to take that. And where we left you hanging is extra income. For most people to get out of debt, again, cutting lifestyle is only part of it. If you're serious about getting out of debt and the hole that you've dug, we're going to have to get extra income to get out of debt and build wealth. And so there are 5 different ways that you can get extra income. The first way that you can get extra income, and it's kind of interesting how this is happening right now as we're in the tax refund season, or tax season rather, is to change your withholdings with your W-4 so you get more money coming in with your paychecks, not counting your tax refund. Because what happens is, again, the average refund's around $3,000 to $4,000 a year. And if you're getting, let's say, a $3,600 refund, that's $300 a month that you could be receiving to help pay the bills, to help the debt snowball, versus getting a big refund. Because the myth is that we want this big $5,000, $6,000, $7,000, $8,000 refund, and then when we get that big refund, we'll put some in savings and we'll put some to getting out of debt. Now, if you're getting a big refund this year, I agree that is a good way of doing it. But if you have a refund of $3,000, $4,000 or more, $5,000, $6,000, $7,000, that's too much refund. So talk to the person that helps you prepare your taxes and ask them, what do I need to change my withholdings to so I'm not getting this big, hairy refund? Now, for me, I'm okay with even paying a few $100s in taxes every year than receiving thousands of dollars. Now, I know when I say that, a lot of people go, oh no, I don't want to owe the IRS anything, and they get freaked out. And so if that's you, just get a $500 to $1,000 buffer, okay? And at the end of the day, we want to reduce your tax refund so you have more coming in every month. That could be a quick, easy $200, $300, $400 a month to go towards your debt snowball and help knock out those debts quickly. Another way you can do this is by changing life insurance policies. Now, as we talked about last week, I'm not a big fan of whole life insurance policies or cash value policies. So if I was you, I would go to conroyinsurancellc.com, and I think they have a referral website, or you can go to xanderinsurance.com, or you can just Google life insurance and get a term quote. And when you get a term quote, go through the application process and get term insurance. Because term insurance not only is way less expensive, but you're also going to have this cash value freed up. So if you've got whole life insurance and you have cash value, get term insurance. And the moment you get term insurance, get out of your whole life policy. Now, please hear a few disclaimers. If you have whole life insurance right now and you are no longer insurable, do not get rid of that policy. I'd rather you have that policy than no policy. So do that. But with my wife and I, how we paid off our final car loan was we switched from whole life to term. And when we got all of our cash value back, we took, I can't remember, $6,000, $7,000, $8,000, and we put that towards our car loan. And not only did that get rid of our car debt, and we were car debt free, but that also freed us up of about $300 a month in car payments. So again, get term insurance if you've got whole life insurance, and as soon as the term insurance is in place, no sooner than that, then get rid of your whole life insurance policy, take that cash value, and put that towards your debt. The next thing you can do, and this is going to probably go, wow, I can't believe he just recommended doing this, is temporarily stop investing in your retirement, in your 401k. Temporarily hit the pause button and use that money coming in every month versus your 3 to 6% and put that towards your debt. Now, for the last 20, 30 years, we've been hearing all along, you always, you give up to the match, let the company give the match. That's free money, Justin. You're asking me to give up free money. And I know for me, that was hard to, when I first heard that, to swallow. But then I started running the numbers. If you can be debt-free in 2 to 3 years, it's going to be worth you hitting the pause button, because the most I ever hear of folks investing is up to 6%, because most people just follow the match. Well, we recommend the Dave Ramsey baby steps, and in baby step 4, the recommendation there is to invest 15% of your income. So if you take a 2 or 3 year break of your investments, put that towards your getting out of debt and finishing your emergency fund, now go from investing 2 or 3 or 4% of your income to 15% of your income, you're going to build wealth a lot faster and a lot bigger and a lot stronger. Now, if your debt-free plan is going to take you 5 or 6 years, you may want to reconsider that and maybe reduce it down slightly. But for most people, excuse me, you can reduce, by reducing what you do in investments, you can easily add that to your debt snowball. The next thing that you can do, sell stuff. As Dave Ramsey likes to say, sell so much stuff the kids think they're next. Name the dog eBay, name the cat Craigslist. Have a garage sale, sell stuff. There's, if you look around your house, there's a lot of things, I'm sure, sitting there collecting dust that you could sell. And I know we're not in garage sale season mode, but you could go ahead and start getting stuff ready for garage sales, or you could put it on Craigslist, put it on eBay. I mean, my wife and I, for fun, a couple years ago, we started our own little eBay business, and we took $20 and in 1 month turned that into $500 to $600 by just taking that, by buying stuff at garage sales and selling some of the stuff we had at home. And it was a lot of fun too. And we got our kids involved, and we went shopping and found great deals and put them on eBay. And again, in 1 month, we turned $20 into about, I can't remember, like $500, $600 somewhere in there. So sell stuff. And that might be a quick way to get your $1,000 emergency fund or to get that snowball running. Here's the other one. Get an extra job or overtime. Work extra. It is worth the extra work. And you might be thinking, no, wait a minute, Justin, I've got a family here and I don't see them enough as it is. And you want me to go add some more hours to my life? Not forever. But if you could, for 2 or 3 more years, be deadly focused, so all that money, the extra, goes to getting out of debt, wouldn't it be worth it? So then you can save money for your retirement, to save money for your kids' college, to go on those vacations you've always wanted to go to pay off your house. You can't do those things when you have all these debt payments. So it would be worth 2 or 3 years of sacrifice to win. Let me show you a story on that. I'll never forget my wife and I, 1 year for Christmas, we were given a $50 Red Lobster gift card. So 1 July, my wife's an artist, and so we came down here to the downtown art festival, and after we had our fun there, we went to a local Red Lobster. And what was really interesting as we were in the store, and I was watching, we just spent what was on the card, and I was watching everybody else, and there's this one family in particular, had 4 kids, and then their parents. And I watched how every one of them had a specialty drink, and they each had appetizers and the main meal and the dessert. And I'm starting to add this in my head going, wow, that's a pretty big bill. Then I took that times 15%, and I'm going, wow, if I'm a waiter or a waitress and I'm doing this can add up quick. So I asked the waitress, I said, I don't mean to pry too much here, but what can someone make around here in tips? And she said, no, I'll actually share my story. She said, I was doing this only part-time. I was a full-time nurse. But once I saw how much money I could bring in being a waitress, I actually went full-time in a Red Lobster. And she shared with me, 9 months out of the year, she averaged $1,500 a week in tips. That's a full-time job, mind you, so it's different. But for $1,500 a week in 9 months, that's $54,000. Not counting the small wage that she was getting, not counting the other 3 months. She said, Justin, I only do nursing once a month now just to keep my nursing license active. I know lots of people who get a job delivering pizzas, and they'll easily, in 15, 20 hours a week, they'll bring home $800 to $1,000 by 15 to 20 hours a week. That's not working every night. That's only working 3 or 4 nights a week. Isn't it worth working 3 or 4 nights extra a week, or early morning jobs, or hours that you're not normally doing it, to get out of debt? Or maybe you can start a business on the side with what you love. I've got clients who love photography, so they've started their own photography business. I've got clients who, they don't mind getting up early, so they'll go out and deliver papers. It doesn't matter. At the end of the day, we need more income if we're serious about getting rid of this debt in 2 to 3 years for most of us. Now, I mentioned earlier selling stuff, and I read a blog that I wrote, and a reply to that blog, where one of my clients sold their $34,000 vehicle. And some of you might be thinking, you know what? Well, not everybody does that. More people do that to get out of debt than you realize. Just this year alone, in 2013, we just got started, I know of a client that sold their vehicle for $14,000 that freed up over $400 a month. That's almost an extra $5,000 in debt to be able to pay off. Think about that. $5,000. Most of us have a bill that's $5,000 or less that you could pay off just for them selling the car. Last year, I had many clients, but one client that always comes to mind is they had a car of almost $600 a month payment, and they sold their car and got rid of $25,000 in debt. Now they're driving a $1,000 car, and they're loving every minute of it. Why? Because they have the peace of not having to write that check every month, and that $500 to $600 a month is going towards their getting out of debt. That's not counting the other debts they're paying off. That's not counting changing their withholdings. That's not changing extra jobs. That's not changing selling other stuff. So again, the 5 things you can do to get extra income is to change your withholdings on your W-4 form. So first talk to your tax person to see what you can do to reduce your tax refund to get you more money coming in every month. Then talk to your HR person, and they'll walk you through how to fill that W-4 form out. Also, if you have whole life insurance, get term insurance. Once term insurance is placed and it's there and it's done, then go to cash, get rid of the cash value, and use that cash value that you've earned, put it towards paying off debt. Temporarily, number 3, suspend giving to a retirement account. Do not do a 401k loan. Do not do a debt consolidation loan. Just simply hit pause for a couple of years until your debt's paid off. Suspend putting money in that retirement account. Sell stuff. We just talked about it. Sell cars, sell the toys. Maybe you got a boat that you don't use anymore, or you got antiques that are just sitting there. You used to be an antique collector, but you're not anymore. Just sell stuff. You probably have clothes from kids that they're not even wearing anymore. Consignment sales, Craigslist, eBay, garage sales. Get intense about this and sell some stuff. Lastly, extra job. It never hurts anybody to work a little bit extra to get out of debt. And if you do those things with a budget, have a $1,000 emergency fund, and if you're married, agree on what you're doing with your spouse. If you're single, have an accountability partner to keep you going and keep you encouraged. Yes, you'll be tired. Yes, it'll be strenuous. But wouldn't it be worth it to be debt-free, to pay off $20,000 in debt, $30,000 in debt, $80,000 in debt? It would be for me to be able to pay that debt off, have those payments freed up to save for an emergency fund, to save for retirement, to save for the kids' college, and have financial peace. It would be worth it. If you want that same level of encouragement, if you want shown how you can get out of debt personally, go to my website at strongtowerconsulting.com, click on the free consultation link, and sign up for your free 30-minute consultation. I will walk you through step by step how I can show you how to become debt-free and build wealth. I want to thank again Ryan Northfield, our producer. I want to thank Webcast One Studios for giving me the opportunity to use their studio to share this with you. Again, I am Justin Bennett, your host of Strong Tower Financial Hour, where we help people go from being broke and scared to having hope with a plan. Good night.
accurate and authoritative information with regards to the subject matter covered. It is sold with the understanding that neither the radio host nor the station are engaged in rendering legal, accounting, or other professional advice. If legal advice or other expert professional assistance is required, the services of a competent professional should be sought.